A very good morning, everyone. It's a brand new week, and I would like to welcome you back from that weekend, plus the public holiday, other bank holiday that we had yesterday across our major currencies. I believe there was some movement in the market yesterday, but today is the official start of the week, coming out of that 3-day banking holiday. So we're going to resume in just a minute or two. Let's give like 1 minute for just a few more guys to join up. Don't forget to like, share the link. Of course, you can go ahead and put your comment section, your comments or your questions down in the comment sections, and we shall get to them towards the end of our stream. So just a minute to just give room to a few guys to just join up. Then we can kick on with it. Besides that, I would like to remind you that at FXPesa we do offer a variety of how should I call them, pro-development opportunities for you as a trader, from free classes to free seminars to free insights in the market. We have a signal center that's very amazing, and you can be able to incorporate it to your MT5 as you're trading as well. So be sure to watch out for all of those different incentives that we do offer each one and every one of you when you're trading with FXPesa. All right, so without further ado, with me, I do have our Forex Factory chart. As you all know, it's always the first thing you want to look out for whenever you get onto the market, and you want to be sure to know that is there any volatile news that may come in, and try to probably dismantle your trades or take you the other way around. So other than that, as you can see, the only major news event that we had, by major I mean the ones in the red folder or high impact news events, was the Bank of Japan governor who came out to speak, and he had a few critical issues to speak about, in terms of interest rate hikes that may be upcoming, and in terms of the Bank of Japan easing. So beyond 3 a.m., I think we are safe through the day. We do have some core durable goods and orders. We have durable goods and orders, the monthly. We have the CB Consumer Confidence and SNB Chairman Shelgel speaks as well later in the evening. So the major movers for this week, though, will be tomorrow's RBNZ monetary policy statement. They will be coming in to give in their interest rate statement, as well as the FOMC member will come out to speak and later on give in the minutes. So tomorrow will be a very important day to watch. Of course, we do have the day after that, there will be the unemployment claims, very, very important. As you all know, we're now drawing closer to the unemployment rates, which will be next week on Friday. So we know how important these unemployment claims will be, very, very crucial to us today. So yeah, then of course ISM manufacturing, that will be next week. Yeah, so that's it for this week in terms of the major news movers for today. We are good to go for that day, so we can be able to look at some opportunities that will be coming through. So from the macros, do we have anything that may be major that we may want to look out for? So of course, what we want to pay attention to will be gold. We all know the volatility on gold and how good it is for us. So they tell us that the headline is gold extends losses as EU-US trade talks weigh on having demand. So of course, when they say gold extends losses, they're basically just meaning that gold is continuing to drop, as we've seen the drop from the morning after, of course, the Bank of Japan speech came through. Gold continued pushing to the downside, and yeah. So and one of the things that I'm telling you here that's pushing this drop on gold are the EU-US trade talks weighing on demand. As we all probably know by now, Trump was able to extend the day for imposing more tariffs to the EU from the 1st of June, and shall now be watching the 9th of July, sorry. So yeah, it's enough time, and all of those that were following that guy, and she made a speech and she spoke of how they may need the US, but she also spoke of how the EU can in the future become a worldwide or a global reserve currency as well. So it's a mixed reaction within that. So let's read a bit of this article and see if we can draw something from it. So gold extended declines as the dollar slumped gain and demand for heavy asset cooled, with investors also weighing prospects for improving trade relations between the US and the EU. Now, this majorly happened after the Lagarde speech, because she was very positive on the negotiations they're having with the US. So they're saying the bullion fell as much as 0.8%, following a 0.4% loss on Monday. Of course, when you look at your chart right now, the Monday was bearish, not so big, but we have gone off strongly with the bears today morning, coming out of the Asian session. So after Brussels said it would accelerate negotiations with Washington to avoid a transatlantic trade war. Meanwhile, the dollar strengthened and markets digested news of the Japanese government considering reducing debt insurance. A strong dollar makes gold more expensive for most buyers. Demand for safer assets, So they tell us a demand for safer assets like gold has been impacted as signs emerge that the White House may be making progress in negotiations with some trading partners. Gold-backed exchange traded funds registered 5 straight weeks of outflows since peaking at the highest in more than a year in mid-April, according to Bloomberg calculations. So just to digest this in terms of our retail trader or our small-scale traders, as we may be out-and-core traders, we all know that when there are trade tensions, investors tend to drift towards safe haven assets or safe haven commodities, and gold happens to be one of those. So that means when the trade wars are continuing and these countries are going back and forth in the trade wars, people are getting their money out of the currency and they're putting it in gold. But then when the trade negotiations start coming through, and the US looks like it's making deals with our economies, now the EU is on table. China did have something a few weeks ago. India had something critical to do with the US. Every time the negotiations tend to come around, we see that the investors tend to take their money out of gold because it was just a safety net. It was like an insurance policy for them, just a mere safety net when things are looking bad in the macro world. So now that Trump is going through, or the US is going through negotiations, having extensions, giving us that sign of positivity from some negotiations, investors are feeling safer to go back into those currencies and reinvest in them. So here's the news thing I would like us to look at before we can now drop down to the technicals. So the stocks 50 and the stocks 600 both edged up at 0.2% on Tuesday, extending gains from the previous session when they rose around 1%. However, optimism surrounding the delay of former President Trump's proposed 50% tariffs on EU imports began to wane, and investors looked ahead for new market catalysts. On the economic front, Germany's GFK consumer confidence improved, though less than expected, while the inflation in France unexpectedly eased to 0.7%. Defense stocks outperformed after Trump announced he was considering new sanctions against Moscow. Rolls-Royce 2.7 percentage of some of the companies and how they performed through yesterday's market. So ideally, the market reaction from the stocks 50 and stocks 600 had pushed up today morning, of course, from the previous session when they rose around 1%. But then the challenge they're getting right now is the fact that Trump has extended the extension period on the imports, because in most cases, people are betting on the negotiations to look to fully go in. So what they're doing is that they're not going all in on the markets, because they're waiting to see, because now the period is longer before the decision comes into play. And we expect to see them edge higher the more we get more announcements on this. But as I tell you, since that our time is now going to be longer than expected, right now there is no much anticipation around the Euro-US trade talks, because now they have a bit of time to come to a negotiation. So what the investors have done, they're now looking at other things that may escalate and probably try to give them an edge or where they are going to be able to speculate in the market. So they are looking at right now the relationship between the Russia and the US in terms of what's going on. We all know that over the weekend, there was a back and forth between Russia and Ukraine, and Trump came and spoke against it, which means that, and he also spoke about the sanctions that may push onto Russia. That means that the investors are now drifting further away from, of course, some index, some stocks, for example, the military stocks, in simple terms, because of course when they go to sanctions, that means they are going to be economic sanctions, not military sanctions. So that means there won't be a lot of demand in terms of military equipment and things like that. So that aside, we can now drop down in the meantime to I think we can now go into our charts and start looking into what are the major market movers for today and where we can be able to look for some opportunities as well. So just a second, I get our charts up. So meanwhile, I would like to remind you that spreads of FX beta have been greatly improved gold, NASDAQ, US oil. So feel free to check them out. And feel free to open an account if you have no account and check the link in the bio. Link in the bio, no, the link in the description, sorry. Then you can be able to get started as well with a best broker around. So as you can see here, this is our 4-hour chart, and the bid and ask price are barely inseparable. So what I have with me here is a gold chart. So coming from let's start from the daily, of course. As we see, so they spoke about the daily pushing to the downside. As you can see, today was a bearish day, and so is today. We have seen that big drop on gold as anticipated. So right now, we can clearly see that the drop has come into a daily area of interest or a daily structure breakout, right? So this is a level that we want to see a whole price in the daily, probably pushes higher. The difference between this is the fact that right now, with our macros ongoing, we may want to see price retrace to the upside, then later push and break below this level. So that's what we would like to see going forward. What I would like to see going forward, based on the news events we have just seen right now. But in terms of intraday opportunities, we can tend to now look for some buying opportunities on lower time frames. Because of course, we'd expect a retracement coming from this zone. If we're to refine to the 1 hour, we do find that price is currently respecting a good demand level. That can give us a good reaction probably to supply level from where we can look to take a decision. So the idea of gold right now would see a price push slightly higher, of course, to a supply level, and then look at obstacles that may be able to hinder price from getting there. So this is supply level that we have all the way up here. That's the supply level that we have. That is fresh, so we can easily look for price, push all the way to the supply, and then give us a return to the downside. From here, we do have a free range, but in between here, we do have this major level that you want to watch out from, and would act as a possible target area in terms of your trades. We can try to look at this push, and this is our 1 hour candle that will be closing in the next 40 minutes. So if it closes bullish, whichever way, we can expect that correction move, push to the upside, and probably see either this resistance level, push price. Price comes at a very high momentum, especially going into that New York session. Sometimes we may have a big momentum come through. We have no major news events, which will be tricky, so we can easily be able to see. We can just be able to see it go into terms of a correction, move to the upside, then now drop to the downside. So that's an angle we can look at on gold. So we have this resistance, but we have the supply level above. I don't ideally like crude much resistance levels, but if they offer confirmations, then they are a very good place to watch. Supply level will be our best possible pick in most cases. So that's what you're looking at on gold right now. So let's move a bit to the euro. So now this is still from our last week analysis. We did see price break above. Came had difficulty breaking around this area that I marked over here. This was our resistance, and eventually price was able to break out of the resistance, and then we tested it and then had that push to the upside. And said that the overall target was this supply level up over here, that we'd like to see price and push us all the way there. And right now, with the negotiations going on with EU, we can easily see price respect the current demand level we are seeing on. So this is the demand level we currently are on. Let me just change this color to be a bit more visible. Just have this. See what color could be weighing. Let's see if this can be. Yes, so yeah, let's have that. So this demand level is where we would like to see price can be able to respect and push to the upside. In terms of looking for downside opportunities, you'll have to do when price breaks all the way below this level here as our support level. So if price breaks all the way below this level here, then you can see price lower. But for the meantime, we'd like to see this area hold price over the supply level. That would be our target that we have been pushing towards ever since last week. So this EU are very, very simple, very, very precise. If you wish, you could be able to draw a trend line from the downside to kind of act as a guiding tool on where you may want to take. And you can still set this ascent demand level to still align with this kind of a support level as well. When you look at the reactions that price has been giving us around these areas here, multiple times, and you have these multiple rejections and breakouts. So that's why the demand level was formed, and making it probably a high probability at demand level, but you could as well confluence it. For our, we'll be looking for a more perfect kind of trend line to draw. You have that at your 1 point. You want to have a second touch, and then you want to have something like that that can easily be able to make a much more perfect sense for you as well. So can just be able to align all those different alternatives to be able to see what you can be able to offer us going through that day. And this is during a 4-hour time frame. So personally, I told you I'm more comfortable with referring to the whole of this demand level, as you can see. Something we want to watch as well. So in the meantime, if you have any questions, any inquiries, or something you'd like us to talk about, feel free to drop it down in the comment section. Then we shall get to it when we are done with our technical perspective. So now, moving on to USDJPY. So USDJPY, we have seen this push to the upside. And we're seeing some kind of correction. So let's see what kind of area we want to be holding price from there. Just getting my chart sheets. So now this is on a 4-hour time frame. And you can see the price is pushing away from a demand level on our far left over here. So we have a demand level from all the way this side. They get it right. Okay, there. Sorry. You just get these objects, shapes. There we go. So we have a demand level over here that price currently are trying to push from. So the Japanese yen, as you all know, the Japanese yen after the Bank of Japan announcement, we did say Japanese yen weaken a bit, and you can see how aggressive this has been. So due to the momentum of this push to the upside, we want to see a clean retracement. We would want to see a retracement, of course, to around the 50% levels on USDJPY to about this level over here, where we can be able to look for buy opportunities. That will be up 50%. So what that would basically mean, we want to see price retrace all the way within these levels where you can be able to look for buying opportunities. So this will work like a passing model level of QM pattern or a head and shoulder regardless. And this would be a level we want to see price retrace towards, then eventually push to the upside. So USDJPY is what we want to see. In the meantime, for price to go down to the downside, we want to see some kind of sell opportunities coming through, especially through the London to the New York Open. We can do to see what kind of demand areas we will offer that are supply, so that our retracement or that correction move to the downside. So currently, as you can see, we have this whole area here as our area of interest that can easily be able to, and can see the first rejection has been formed. So it's the 30-minute time frame that will be closing. In the next 30 minutes, the next candle will be closing, and we are seeing that kind of rejection. So you can easily see our price push from here, and this could definitely be your first target before you get to our ideal entry area. This could be your first target, and of course, after price gets to this, you can expect some retracement, then later a push into this area to the downside, where the cost level, and you can see there is some kind of demand level. The price forms right around here. So this could be something we want to watch out for. We'll see a push to the first target, then a push to the second target. And as you can see, this area or the supply level is already giving us some good rejections within that area, and we hope it closes bearish in the next few minutes, probably about 3 for the USDJPY pair. So moving on, let's look at Sugar NZD for a minute. So from last week, we spoke about this big demand level on Euro NZD, and we say that prices was in a correction move and having difficulty to break below. So it's continuously pushing this area, continuously holding this whole level as a demand level, as a support level, sorry, using the whole demand. That's a level from the daily time frame as well, as you could see. It's a daily demand level that price having difficulty to break above. So let's just see what we can be able to see in this, if there can be some low time frame opportunities. All right, so let's see. So office demand level on a daily. Let's look at what the 1 hour has for us. Then we see if we can be able to formulate something within that. So price is already pushing away from a demand level, and where would be the next possible target? So let's first mark the demand level from which price is pushing away from. So this is the demand level that we do have, that price is pushing away from. And then where could it possibly be targeting? So we have two supply levels at the upside that could work as potential targets for price that you can use at the take profit levels. Take profit where the supply level. Then we do have an extreme supply level right over here. So this will be our possible targets that we want to be watching out for. In the meantime, there are always areas that price can be able to offer reactions from. Now, one of those areas that you can see here is this kind of area. So personally, I call them aligned areas. This can cause of the kind of price action that price forms around that. So these aligned areas, once in a while, price can tend to respect them and offer deep retracements. And even sometimes or some occasions, it can actually be able to entirely change its direction from such levels or gain momentum within such areas. So this is what we want to watch out on Euro NZD. You can see price push to these areas, probably with some kind of how should I call it, kind of like to find difficult probably to break around that, but hopefully it would be best if price breaks to the supply level, then you can look for confirmation if it's going to push the downside. But if the momentum is quite high here, you can see price hold all the way to the extreme levels, then later on push to the downside over a retracement. Probably continue the bull trend that you have been able to see on the daily time frame. It's an alternative. So let's move a bit further and look at this GBP card. All right, so which one? Let me just try to get a template like this. So I think this is the ideal template. So to confirm with that. So yeah. So look at GBP card. Let's bring it all the way from the daily. So now look at that daily time frame. So and just in case you're not aware of how you can always be able to customize these different settings on your MT5 platform. Sorry, you can check the video that dropped recently, I think last week, that you can be able to use and learn how you can be able to navigate these currency pair, these charts as well, or to adjust them, how to make them more flexible as well. So just get this, just a second. So all right, so here we are. So the currency price has been having a very funny price action around this currency pair. And one of the ways you can always navigate around this kind of price action is to use the line chart. It's a classic trick off the books, very, very easy trick to use. So as you can see, price has been trying to target this area over here, where it currently is at the extreme dim supply level as well. But we see that the price action price is doing still very, very bullish. As you can see, price is finding difficult to push the downside. We had a rejection, but price coming in with consecutive weak fills that you can see over there. So this makes this a very weak resistance level. So you can see we have no clear supply level around here. Supply level here had already been used or consumed twice, thrice over there. So it's a very weak level. What we can be able to watch for as a target on this area would still be its resistance level. But now we want to see that the target because price has retested those levels multiple times. So we can hope to see that price eventually comes and pushes way into this and probably even breaks it, because we have seen those first retest, second retest, fails to create a new low, and price continue to push the upside. So going into this price action, would love to be bullish on a GBP card. And of course, let's just get to refine this. So you can see momentum coming in is very, very crazy, or very, very much, and still coming from a demand level on the 1 hour time frame. So when you look at this carefully, this is the demand level we are having. In case they're hard for you to see, you can always have them on the line chart, and you can always be able to set the demand level there. Of course, you mark it till the week, because your stop loss will be below that structure week, ideally. So that's something you want to watch out for. You can always be able to refine these areas, just our lowest demand level, and you could see that upon refinement, this would have been our cleanest level we would have taken. And of course, you can always use your fib tool as well to try and get the ideal best entry areas that you want to watch out for. That will always be about the 50% level, and you can see a rejection off of this was very, very beautiful. And there was the area, so you can start price is pushing away from this demand level and just consumed up to 50%, which is a very good omen or a very good sign for us. So right now, looking at the current price action on GBP card, we can be able to extend this to this demand level that price has formed, and you can still use the classic Fibonacci kind of example to look for an ideal entry point. So you can see this retracement hopefully pushing to an area of this nature here, and you still mark your 50% level. So let's just use the same line, extend it to these levels over here. So you can definitely see GBP card retrace back to these levels, and then you can try to see price and be able to push from that particular area and go all the way to the upside. So this would be what we want to watch out for on GBP card, or the cable and the Canadian dollar. So moving forward, what is that page should you look at? Let's look a bit at JPY. So personally, JPY, I did take a loss of it early morning, of course, right before the market went off in my direction. But it was entirely sponsored by the governor of the Bank of Japan, UEDA. He sponsored my early morning stop loss on a JPY. But the sentiment remains the same coming in from his speech. So let's just see this. It's my chart shift. There we go. So we have seen a very good breakout from here on our JPY. So as you can see, we did have a good demand level that price pushed from. We do have quite a very good demand level that price had come back into a daily level. It's on a 4 hour time, I'm sorry. On a daily level, you can see it a bit, not so quite well. So on the 4 hour, we had that level that price pushed towards to. When I come down to the 1 hour, so personally, I had taken this demand level in my buying area. I had a bit of profits, then price came and took me out in that particular area. So you have seen prices pushed all the way to the upside. And then what we anticipate is that later on in the day or within the week, we can hope to see some kind of a correction move coming to these levels here. So this is the breakout level we had. So once again, we're going to use our classic fib refinement tool. So I call it fib refinement because I use it to refine entries within structural areas. So of course, 50% level is what we need to be that. So when we have that level there, we can now look to see if price could be able to come in and retrace all the way to that later in the day. For now, the momentum is really, really high, and it's not something that's going to happen in immediate effect. So we're going to look at a possible area. So around this would be our very best level to look for those buy opportunities. So in the meantime, we're going to look for possible areas that can facilitate a retracement to the downside. UEDA will sponsor stop loss yangu in the Asian session. So as I was saying, we can look for an area that can offer possible retracement to the downside. We have this level over here. So why I hope this to just push our retracement to the downside. Right now, we are very bearish on the sentiment on the JPY index particularly. That means we become bullish on JPY. So what we want to look at would be areas that offer retracements for us to buy again on JPY, just similarly to the outlook we're having on USDJPY. So we have an extreme supply level that will be our target going through the week. So expect price to push because the momentum is really crazy. You can see it push to these areas, offer that retracement, then push to the upside. Another thing is that based on this momentum, we have what they call a flip level, or it was as a resistance, then price now comes and breaks above the momentum. So these are levels that give good reactions, and sometimes, as I told you, when we're looking at, I think, at JPY, these areas can mean to give us some kind of good reactions because this is an ideal. That's now at support level. It was resistance here, and you can see the reactions that price kept giving us around that. Let me just be able to mark it out. So this is how I tend to mark my support and resistance levels. And I like other flip levels when it comes to how price breaks out. So that area that I'm going to be able to watch, I won't pay that much attention to it, but then I would want to watch it. I would want to watch it closely. What color should we give this one? Let's give it yellow. Let's give it yellow. Yellow is not a very strong color, so yeah. That means I think we can just be able to watch out for, and then can be able to look for opportunities within. Now remember, these levels we are marking out here are just areas of interest or areas where you can be able to take an informed decision from. So you can always go there and look for your preferred confirmation. Of course, I'll give you my best possible text in terms of perspective, the best possible area you can take a decision from. So yeah, this is what you're looking at. Remember, this is not financial advice. You can just be able to use it to complement onto your trading as well and see if you can align as well. So yeah, that's what the BJPY. So let's drift a bit onto some kind of indices. Let's drift into indices a bit. Then after the indices, we shall look at, I think, 1 or 2. Then if you look at 3, then we shall then drop onto your questions and your preferences. Then we see what's going to happen. So this is our US 100 roll or our NASDAQ from last week. So we did see price coming to this demand level, then give us that push to the upside. Remember, from up here, price push down, retested, push to the upside. So you can see at the same level, similar to the kind of level I just marked on BJPY, the one I marked in yellow. So here it was a support, becomes resistance. So price came in, rejected it, and pushed to the downside to the demand levels, and then pushes to the upside. This is on a 4-hour time frame. And of course, because price had exhausted these levels already, we can see price came back at slowed momentum or volume, pushed down a bit, but then it was able to find this. I think I see guys call it a breaker block. So it's a very good level you can always take trades from. Price breaks out, tests it, and currently what we are seeing is price creating a new structure by giving us a break out of this level. So if we see a 4-hour breakout from this level here and close, that means this 4-hour candle should close above this wick over here. That means that we can, if this closes above this, we can be able to look for those opportunities to push price to that level there. So let's drop down onto a 30-minute probably and see if at all there would be areas we want to watch out for to take these possible trades in case price comes around these levels here. So when you look at this, the major structure comes from here. This is where we have the major structure breakout. So first, once again, going to look at our classic Fibonacci. I call it a refinement tool because I use it to refine where I'm going to look for my best possible areas. So we can have this come around there. And of course, we are seeing that ICT thing called a breaker block, which is a good level I like watching as well. So once in a while, though of course my preference will still be the extreme demand level. And of course, you don't just trade the demand level. You want to take a confirmation when price comes to it, or of course, the lower time frame. So this is what we want. This will be the best possible opportunity or the best possible selling area. So once again, let's change its color, show how serious it is. So it's in that color that I don't know this color. It's kind of like greenish. So there's that level there. Then of course, an area you want to watch. In terms of watching, you just be skeptical on it a bit. Is the breaker block level. They also tend to hold price occasionally. So it's the level you want to be skeptical about and just try to watch out for and see as in case. And if our price comes with high momentum, it's usually going to violate these areas and push to this area here. So it's why I pay too much attention to these areas usually. But sometimes you tend to have that kind of momentum coming and push the upside as well. So that's on a US tech, or you can call it the NASDAQ or the US 100. So let's move a bit onto our US 100. US 100. So we saw price pushed all the way to this demand level. This is on a daily time frame. Once again, so let's just have this and have some kind of a clear chart. So we saw price push all the way into a demand level. That also happened to facilitate the total fill of this gap here. So this is a demand level we saw price push from. And as you can clearly see, price coming all the way up from the possible supply level. So with this area here, we have this kind of a QM or a quasi-model level. So this would be a reaction level I would want to watch, because the QM, or the left shoulder part of the QM, the area I like watching for corrections, or it's our target for now, because it's a daily time frame, right? So we can look at yesterday we saw a bullish engulfing form from here, and that means it definitely formed for us at demand level. And we saw that from today's price action, early in today's market open, we saw price come and retest that daily level as well. So that means through the day we shall just be looking for expansion movements away from that level, and of course facilitated by retracements. So if this is our range again, there's always the possibility of using our classic Fibonacci refinement tool. So if we refine this clearly, we have a 50% level here, but then there is this demand level here that is kind of not quite at the 50%, but happens to couple in with 50%. So personally, I would like to watch for opportunities within these areas. This would be the best possible area I want to watch. But because I have a level right below it, I'll just expand it as my whole area of interest that I'll just want to watch. By watch, just watch it, look for confirmations in case price comes to it at the end of the day. So what I want to look at when we're starting. But of course, for price to come this low, because when I look at my trade opportunity, this being a 1 hour time frame, I want to pay more attention to our immediate price action, which is this. Price does have a target pushing all the way to these levels here, or this consolidation here, then price breaks out of it. So I think price is going to push to here before it breaks all the way down there. So what we want to see is once again, let's follow the fib and see this where our breakout occurs from. So yeah, these are levels we want to watch out from in terms of intraday opportunities. So what I would anticipate for its price to come around these levels here, then push to the upside into that level right in the red line above. So if you push to these areas, possibly then you can start buy up to these areas and probably look for sell. If price violates them, then we go all the way up to the upside to the next possible levels that are fresh, which is this sort of consolidations. Yeah, probably two that high around that. So let's look at our last index for the day, and let's go all the way to Europe, or Germany in particular. So we can see, and this was our analysis from last week. So we did see that from last week we did have this level here that price pushed from. We saw a first retest, then we anticipated the second retest. And remember, this was our range we had here. And when you look at your refinement tool, price had come to 50% on our first retest. That was the week prior to last week. Price had come to the 50%, just barely tapped the area. That means the level was still fresh. So what price did, we had this momentum coming. So of course, we had a breakout from last week that we're looking at. So this was the ideal trade we took last week, or that we looked at last week. This was that, as I told you about earlier on, this was a resistance supply level, and this I tend to mark them. But I told you they are minor levels. So it's that price came to it, gave us a very beautiful reaction of this, failed to create a new high. So it fails to create a new high, it's going to go down to peak, definitely what they call more liquidity. And when price pushed down, pushed to this supply level. Remember, we established that the supply level, actually it's demand level, not supply. This demand level, it's still fresh because price had consumed at least 50% of it. So it's operates to exactly that. And now we can see demand 40 is pushing all the way to the upside. So right now, what we're seeing right now is we have this multiple, this strong rejection. This is a 4 hour time frame. So these rejections can account to be strong. So what we want to see is a clean breakout of this level. Then we can now look for that retracement. Then you can now see if price can retrace lower to the supply levels below. So right now, here the supply levels we want to watch out for. The supply levels we want to watch out for. So here you can see some kind of consolidation. So I'll tend to take the whole of that as my demand level, sorry. Where am I showing the supply today? Then of course, this would like our last resort at demand level that we want to watch out for. So you can see price either retrace to this and push to the upside, but if price breaks below this area, this is a very good range for it to catch a few pips here and there as well. That's the outlook we want to have in German 40 or DAX 40. So first this candle will have to close cleanly above this, or so it candle to close above that, either on the current 4 hour candle or the next 4 hour candle. Then we can now start pricing in or preparing ourselves to look for those opportunities. So I think from here we're going to drop into the comment section and look at some of your few picks and a few of your questions. then we can be able to call it a day and see how the day goes from there. So what's the correlation between US oil and US card? So as we all know, US oil, sorry, Canada itself is one of the biggest producers of oil. I wouldn't say biggest because, of course, as we all know. Sorry, just a minute. So sorry. So as I was telling you guys that, as we all know, US oil is usually correlated to the price of oil because how should I say it? What's the best way to say it? So Canada produces, I wouldn't say the most, but they have a good produce of oil. So that means that their currency, all their exports, one of their biggest exports tends to be oil. So in simple terms, how should I call it? How should I call it? I'm looking for the best wording, but I can't seem to get it. So what I can easily tell you is that Canada has one of the best oil reserves. And is it the best? It's probably top 5 somewhere there. So that means they directly affect the supply of oil. Canada has an economy, right? So if they directly affect the supply of oil, that means that whenever oil prices change, you expect the Canadian dollar to be affected, right? Whenever there is over drilling or under drilling, or OPEC makes some kind of decision that all the major oil producing worlds or nations make a decision that's going to affect oil, the Canadian dollar gets affected. And in most cases, even when the Canadian dollar gets affected, interest rates and things like that, we tend to say that affect a bit on US oil. So the correlation is just because Canada is one of the world's biggest, or is it? I don't know if they produce a lot, but I know they have a lot of oil and they're probably in the top 5. Yeah, the US has reserves and it's the biggest. They have the biggest reserves. So Canada may be somewhere around that. So yeah, it's basically because of the amount of oil they have. Probably either supply or reserve or manufacture or drill. I don't think they drill. So that's the relationship or the correlation between US oil and Canada. So the trend now will depend on the time frame. When you look at the daily time frame on the yen USD, you can see that we have been bearish for quite some time. In terms of now it's on a daily time frame, so the black lines show monthly. So as far as this month is concerned, we began bullish, but then we ended in a bearish, ending towards a bearish move. So on the daily time frame, we are bearish on yen, on the yen USD, USD When I come down to the 1 hour time frame, of course, the move to the upside is a correction move, right? It's a correction move we want to see. So in the 1 hour time frame, we are bullish because we have a breakout to the upside, expect a retracement and a push to continue to the upside. So that would be the trend I would give you, but we are generally bearish on higher time frames. Lower time frames are a bit bullish if you're looking for lower time frame opportunities. But then the trend is bearish as you can see on a 4 hour time frame. So what's your overview of the DXY and its correlation to other pairs currently? So the DXY stands for the dollar index, and this is what we are looking at on the dollar index. The DXY is a dollar index. Where is my shift thing? Here it is. All right, so this is 26 based on contract basis. So what's your overview of the DXY? So I expect the dollar to be strong. Actually, I've been seeing it tanking a lot, especially during this Trump trade wars from April all the way through May. We have been seeing it doing that. So I would expect it to push all the way into these areas here. And when it's pushing into these areas, we expect pairs like Euro USD, GP USD, NZD USD, such pairs, XXX USD to be selling, and pairs like USD, XXX, USD JPY, USD CHF to kind of be bullish until price gets to this area here. Because this is a supply level we want to see on the demand, on the DXY as well. This is a supply level we are seeing where price can be able to push lower. If price violates this area, then we can see it push the next supply level over there. So the correlation is simple. When the DXY is buying, that means the dollar is strong. A pair that are quoted as XXX USD will sell when the DXY is buying. Pairs quoted as USD XXX will buy when the DXY is buying, and the reverse is true. Somebody goes ahead and asks for check USD CHF, please. Let's just hop on to USD CHF. Do I have it somewhere here? Here we go. So let me just get a template for it. So let's get a template for this. All right, so let's get it from the daily. From the daily, so you can look at the structure of the USD CHF. It's very, very similar to the one in the USD. On the DXY or the dollar index, very, very similar. In fact, you wouldn't be able to separate the two. If you look at them critically, you can see this. This is a daily time frame. And then let's just compare it to the DXY. And this is a DXY. You see this pushing to this area, supply level. We are seeing the same kind of structure on USD CHF. So my perspective would be that supply level is still our target. This on a daily time frame. Supply level is our target, where I don't take a decision from. Coming on to lower time frame perspectives, we do have a couple of areas that we can look to take those sales from in case price gets to them. Sorry. So we do have this level here, and it's a clean level. And price currently rejecting it. We can see it push lower. Probably this demand level would be the best area because it's the extreme demand level. That means you can minimize the risk you're going to use on it. It being the extreme demand level, this one over here. Price tried to test it, didn't quite get to it. But then remember, we have aligned levels that I talked about at the beginning of this session. We have these aligned levels that price can get some reactions from. So in case price happens to violate this from momentum, then we still do have one more supply level that aligns within our daily area of interest. And that would be something of this nature here. That is fresh for us. So what about platinum? You want to platinum. So honestly, I've never traded platinum. Let's just look at the structure and see what it may probably offer us. Then is what can I prepare for me quick to add. So let me just change this a bit. Let's see if we can get platinum here. So where can I get platinum? So I'm trying to see if I can get a port for platinum somewhere. Why is this changing? So for platinum, I'm not really, I don't know where. Okay, I'll just try to find out its port. It's a port for platinum. Because I'm not able to get it here. So these are stocks. You just see. Okay, so I've gotten a port for it. Just a second. XPT. All right, so here we have platinum. So let's see what structure of platinum tends to offer us. So set up a template, get our chart sheet on. All right, from the daily time frame, also has been pretty bullish. It's been pretty bullish. We are seeing it coming into a correction, and let's see how far the correction could definitely push, or if we can be able to engage into it. So currently, we have this on the daily time frame. Speaking about those aligned areas, you can see how these wicks keep going to the upside. These are tentacle aligned areas. They can act as minor support levels or resistance levels. So you can have those levels there that price is having difficulty to push into. So we have these levels here. So when you come on a 4 hour time frame, around our time frame, you can see these areas give us how should I call them? They give us some kind of resistances. There have been multiple rejections showing the strength or the kind of volume within this area. So if price happens to reject those areas, we can be able to look out for, let me get this. We can want to look out for probably price giving us, let's look at our 1 hour time frame. We can get an easier structure to trade from. So we have no clear demand level around this. So either price comes and breaks out of a high. I'm looking at this as my intermediate high. I want price to break out from. So if price tends to break out of this, then you can hope for a retracement, then push to the upside. In the meantime, I would expect price to go lower and probably violate this because we have no major demand level around this. We want price to probably go lower and look at how fast a possible reaction area being this down here. These demand levels we are seeing over here. So that means if price happens to close below here, you can move for retracements. Let's just have to have let's have a clear area around this. So if price breaks below this, we can look for retracement. Then price will push to these levels here, where you can tend to look for some kind of confirmation to be able to buy to the upside. So this is the area we want to watch out for. Alternatively, price can break out and then go to the upside. That means you have broken out of a trend line that you can be able to see around here, right? So if price breaks above this high, that would break out of the trend line. Then price offers a very good support level as well. Out of that breakout, would have a good support level around this area that price can retest. Alternatively, you see a break below these areas that have been rejected, a retracement into this area, then a push to this demand level. Any break below these areas here would mean we are going into a free fall, and we have a very good range to the downside. So if that happens, you would anticipate to have a very good swing move to the downside all the way to the side here. So yeah, I think that's my overview on platinum based on the technicals. That's why there's a pretty good structure, so there can be some good opportunities that may be able to be available. So in the meantime, just a quick run. We are going to. I'm going to just let me just share the second screen. Just a quick run, as we call it a day. So let me just share the second screen in a minute. So once again, I would like to encourage you guys to go and check out there's a lot of material for you guys here that you can be able to go and watch out from previous market snapshots, see how we're able to approach the markets. It's very helpful by the on your weekends to go back and watch the different market snapshots that are carried out by the team, Rufus, Prudence, and Robert. Then you can always use them as your back testing. It's a very, very interesting thing you can do. Actually, somebody came and just told me that, oh, he has been doing that, and it's getting a lot of insights in terms of improving how they are trading. So something I'm encouraging everyone out there, you can be able to look into. Alternatively, for recreation, you can be able to go ahead and watch the bullish banter as well. Don't forget to do that. If you have no account with FX Spacer, the links are in every video description. Feel free to go and check them out. Very, very crucial as well. So other than that, if you're having difficulty with customizing or using your MT5 on your computer, you can go ahead and watch this video here. I go ahead and explain how you can customize and feel more confident using your MT5 software as well. So other than that, I would like to thank you guys all for coming through. I wish you guys a blessed and peaceful day. So until next week, we'll meet again. For those of you that will be with me on the TikTok channel on Friday, we shall be breaking down a bit of the markets and a bit of the macros that move the markets and how you can approach them. Other than that, keep it locked and don't forget to enroll for all the classes we offer in your different locations, from the online classes to the physical classes, because they are meant for you. Thank you very much. So we meet next time.